All eyes were on the Bank of Canada this morning as it was set to make its first interest rate announcement since raising rates by 25 basis points back in June and July, with premiers both from BC and in Ontario pleading with the bank to keep interest rates unchanged in order to help Canadian families. We have finally just received our update, and it looks like the bank has decided not to hike interest rates and instead hold them steady at 5%. Now, the Toronto Real Estate Board has also just posted their numbers and stats for the month of August, and according to the data, it is suggesting that we are on course to finally entering a balanced market here in the GTA. So for all you buyers out there but been waiting on the sidelines, is it finally time to get into the market? And if you're a seller, now that the interest rate hikes have been paused, should you hold off and wait until the market picks up again? That's what I'm going to be covering in this video right now. Stay tuned. What's up everyone, my name is Fady Nakhla and I'm a local real estate agent here in Toronto, and for the last 6 years I've been helping people just like you buy, sell, and invest in Toronto. So if you have any questions about Toronto real estate or the surrounding areas of the GTA, drop them in the comment section below. You can also reach out to me using the contact information in the description below and I'd be more than happy to help. Now let's get right into it. So Treb has posted their numbers and stats for the month of August, and based on the data it looks like we are staying steady in terms of months in inventory and that we are moving towards what seems to be a more balanced market. So if you're not familiar with the term months of inventory, what that is basically an indicator on the state of the market in terms of activity levels. Based on this number, we can determine if we're in a buyer's market, seller's market, or balanced market. So if you're looking to buy or sell, you can use this indicator to gauge how hot the market is and which side it currently favors. So how do we calculate months of inventory? It's a really simple formula. You take the active listings for that month, divide them by the number of sales for that month. Every month, the Toronto Real Estate Board releases these numbers, so we can calculate months of inventory for any given month in any given location. And what this number really means is if everything continues to sell at the current pace, how many months would it take for all the listings to disappear if there are no new listings? Anything from 0 to 3 would be considered a seller's market. This is pretty much where the Toronto market sits the majority of the time, and that's where it's been the last few years. There's a big supply issue in Toronto, and really sellers have had the upper hand because there aren't that many options. So this is where you'll see things like multiple offers and bidding wars and homes selling for thousands over their asking price. 4 to 6 months would be a balanced market. This is a more traditional market where the listing price is generally going to be the selling price or the expectation of the seller. You may still have the odd multiple offer situation here and there depending on how unique your property is, but it'll mostly be just one-on-one negotiating where there's sometimes a little bit of wiggle room on the asking price. And then anything over 6 months would be a buyer's market. This is where buyers have lots of options and you start to see listings sit 2 to 3 months with no action, and they start to get relisted and you start to see price reductions. So let's take a look at the stats for August 2023 and see what's been happening in our market this past month in terms of month of inventory. What I've done here is taken these stats for the entire year of 2023 just to compare what's been happening month to month. So we can see from February going into June, our months of inventory have stayed well below the 2 mark. This signals that we're in a seller's market, which is usually the case for Toronto, and this is consistent with what's been happening with the interest rates during this time. If you compare here, we saw rate hikes pause in March and April and then not go up again until June, where they went up only 25 basis points and then again went up in July. But then look what happened in July and last month. We actually jumped from 1.89 to 2.93 months of inventory and again stayed steady at 2.93 in August. There could be a couple of reasons for that. Firstly, at this point we've now had 2 rate hikes in a row with another one that was possibly coming in September, and obviously this could have put a lot of people back on the sidelines while they wait to see what happens. Second, it also happens to be the summertime, which is traditionally a slow time in terms of sales just because there tends to be a lot of leftover inventory or listings that didn't sell during the spring which will carry over, and then you also have people away on vacation and school's off so the kids are at home. So there's a few factors here that could impact this number. Now today the Bank of Canada decided it would not be increasing the rate, which also happens to align with the fact that we are going into fall, which is traditionally a hot time in the real estate market. So if I had to guess, I would probably say we're going to see things pick up a little bit and probably bring that months of inventory back down closer to the 2 mark for September. We also see this being reflected in the average price chart for Toronto. So you can see from February to just about May, as months of inventory were going lower and lower, the average price of homes was slowly climbing up. A few more ticks following this trend and we would have been back right up close to where the peak that we saw back in February 2022. Then we can see as months of inventory start to go back up in June, and then that big jump in July and August, the prices start to fall off. Now again, as we go into to fall, and now that the Bank of Canada has decided they'll pause the rate hikes for now, that number will probably start to climb up again. I think the one thing to keep in mind here is just to have a little bit of perspective. Having just about 3 months of inventory is still technically a seller's market. Obviously, if the trend continues, we're probably going into a balanced market, but even then, there's nothing wrong with a balanced market. I remember back in February 2022 when rates originally started going up and we went from having like less than 1 month of inventory to 3 months of inventory by July 2022 because the rates were constantly increasing in big amounts. Everyone was kind of freaking out and thinking like, oh my god, the market's gonna crash. But you have to remember that we've kind of been on high speed here for a long time. So slowing down and having a balanced market is definitely healthy. If you compare to some other smaller Canadian cities like Edmonton or Halifax, they will float between 3 to 6 months of inventory, and there's nothing wrong with those markets. So I think it's important here to have some perspective. All that being said, you can't just look at the one average that Trev posts and then use that number to be your only factor in making your real estate decisions. There are obviously many micro markets that make up this average, whether you're looking at a specific location or neighborhood or a certain price range or a certain type of home like condo or townhome or detached. For example, let's look at CO1 Toronto condos, which is pretty much the downtown core and pretty much made up of mostly condos. So there were 1,010 active listings divided by 251 sales in August, and that gives us just about 4 months of inventory, which is a balanced market. If we look at, let's say, Markham, and we look at only detached homes, that would be 247 active listings divided by 87 sales in August, which gives us 2.8 months of inventory. So in Markham, if you're shopping for a detached home, we're actually still in a seller's market, and even with the past rate hikes, you're still probably going to see listings that are receiving multiple offers because this area is still very short on inventory and buyers don't have that many options. Within Toronto, on the other hand, if you're looking for a condo, yes, there were twice as many sales at 251 in August, but there is way more inventory. So if you're looking for a deal, a Toronto condo may not be a bad idea. So it's important whether you're looking to buy or sell to really understand the specific market that you're in, down to, like I said, the price category, property type, the specific neighborhood that you're in or looking in, and then take that information to your real estate agent who can then get you those stats and analyze those numbers so they can tell you what kind of market you're in so that you can make a more educated decision. If you are thinking about buying or selling and would like some help figuring out the state of the micro market that you're in or looking in, drop them in the comment section below. You can also reach out to me using the contact information in the description below, and I'd be more than happy to help. I think the Bank of Canada's decision to pause interest rate hikes this month will really set the tone for the rest of 2023. We're probably going to see something similar to what we saw in the spring, where buyers felt more confident going out, sellers felt more confident putting their property on the market, and we could see prices start to increase again. Anyways, guys, as always, if you like this type of content and want to keep up with our market here in Toronto, make sure you like, comment, and subscribe, and we'll see you on the next one.